Good day, ladies and gentlemen. I'm in a GBPUSD trade and I want to explain the analysis that I did before entering this particular trade. Okay, so basically we have price giving us some upwards movement right here. Quickly, so you have an higher high, higher low, higher high. This is like an equal low. You have an higher high here, you have an higher low here, you have like an equal high right here, you have an higher low right here, you have an higher high right here, and this price leg broke structure. Okay, it broke this low. Okay, and it moved in the downwards direction. So what I just need to do is to look for fair value gap. So this is strategy I taught you yesterday. So I look for a fair value gap, along that price leg that broke structure. Let me zoom in. I need this to be clearer. Okay, so this is a fair value gap along the price leg. You can see that the wick of this candle, I'm talking about this candle right here, this blue candle before the red candle, the wick of that candle does not intersect with the wick of this third candle. So this blue candle before the big red candle is our first candle. Then this other blue candle after the big red candle is our third candle, and you can see that their wicks do not intersect. So I'll place horizontal lines on that wick. Since this price leg is what broke that structure, okay, and I have found fair value gap along that price leg. So I'll simply wait for market to come back into that fair value gap, which it did right here with this candle. It tapped into it. Okay, do you see that? Then moved in a downwards direction. So we could have had a nice sell trade, but I was not watching the trade. I was not watching the chart when this happened. I would have caught this trade, so I did not catch the trade. Market later came back there again, tapped into it again, and gave us this nice sell trade. Okay, so basically I was not watching the chart when all of that happened, so I did not take that trade. It would have been a nice trade. Then from here we started having downwards fashion. Okay, price was moving in a downwards pattern. You can see this high right here, you have a lower low, then you have a lower high which came to tap that fair value gap, then you have a lower low here. So something happened, there's a change of character here. Instead of having another lower low, what did we have? We had this price leg that broke this structure. Okay, so it shows that markets have stopped moving downwards and want to move upwards. So what do? We look for fair value gap along the price leg. So I watched this one happen and I looked at the price leg, but I could not find any fair value gap there. Okay, there was absolutely no fair value gap. All the wicks I found are intersecting. Okay, so there was no gap. I couldn't take the trade, but price retraced to a certain point and then moved, but this point is retraced. There's no fair value gap there. Okay, I've checked. You can check your GBPUSD chart. You will see that there's no fair value gap because this particular candle is weak, intersects with that of this third candle. You can see this third candle is weak, it intersects, so there's no gap there. But nonetheless, price will always do what it wants to do. Probably it came into this other block. There's another block here. It came into this other block depicted by this red candle, tapped into it, then moved. But I was not trying to take a trade off another block. I was trying to take a trade off a fair value gap. So what did I do? Still watching the trade. Then I found out that a flag was formed. Okay, a flag is a chart pattern. Okay, if you don't know how to trade with chart patterns, you don't need to force it, because you need to understand what the chart pattern stands for you to be able to enter a trade based on that. So I simply just use my knowledge here. So this is a bullish flag. Price moved in the upwards direction, then gave us this flag and moved upwards. So flag is a continuation pattern. There are two types of chart patterns. You have continuation pattern and you have reversal pattern. So this is a continuation pattern. I waited for price to break out of the charts, Then what I did not wait for the candle to close. This a 5 minutes candle. I entered 4 minutes and about, let's say, 40 seconds. It wasn't up to 60 seconds. It was just a few seconds for the candle to close, and based on the position of the candle, I knew that the candle was going to close outside of that pattern, so it was definitely going to be a buy trade. So I entered my buy trade there, placed my stop loss a few pips under the candle I entered. You can see my stop loss. Let me click on it. That's my stop loss right there. Then I placed my take profits right here. You can see my take profits. I'm gunning for about $60 on this one. Okay, so price has been playing around, has not hit my stop loss, so I can see rejection candles which are scary, so I might just close my trade. These are rejection candles. See, these are rejection candles showing you that we might just start having a downwards movement. Okay, so that rejection candle is scary. I can even see a reverse hammer there. So when I end this video, I'm ending this trade. Okay, because price might just keep moving downwards direction, then come and, you know, put me back in negative. All right, if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.